Investors and traders, welcome to the channel. In this video we are going to take a look at the US banking stocks. This is a new series I will be running because of the issues which we have seen in the banking industry in the United States recently, where two banks have gone under: the Silicon Valley Bank, the 40-year-old bank, pretty large regional bank, and also the Signature Bank. We will review charts of some small banks, the regional banks, but mainly we'll be focusing on the major banks, just to make sure what the patterns are telling us and whether there is stress in those big bank stocks as well. Also in the Eurozone, Credit Suisse storm has been brewing for quite a while, actually for a few years, and now apparently it appears that maybe that might just get a final act together as well, and we'll find out what happens and whether this banking crisis is actually going to spill over internationally. Okay, guys, so what we are looking at is the daily chart of the KBW Banking Index, straight on the NASDAQ. Just a disclaimer, this video is for educational purposes only and it is not a financial advice. So here what we can see that is the since the beginning of last year, that's 2022, this just has been in a decline. So interest rates have been going up, and the bank stocks have been going down. It just made a new low on last Thursday. The only thing is that it is approaching the 78.6% retracement at around $75. So that's something to take a look at. Okay, now let's take a look at this is the Silicon Valley Bank, and it's just amazing to see that at one point this stock was trading at $760 per share, and on last Thursday, excuse me, 8th of March 2023, the stock closed at roughly $262. Then the next day, on the Thursday, 9th of March, stock closed at $106. And folks, guess where it is today? Zero. It's just gone to zero. It's just amazing to see what can happen in the markets. So you have to be prepared for a lot of things. Anything you can imagine cannot happen actually maybe will happen in the markets. Markets teach us a lot. So there you go, a $760 stock gone to zero. Wow. Okay, we are also going to take a look at the First Republic. This one is in the news, just like the banking index which we saw at the beginning of the video. This one is in a steep decline as well, and here I'm going to show you something interesting. So look at the price action here. It's just formed new lows on the 13th of March. Let's go to the weekly chart, and guys, here we go. It has actually taken all the kind of lows out till the data goes back on a trading view. So that's going back in 2011, maybe parts of 2020, 2010, excuse me. Guys, it looks like there is trouble in this one as well, by the looks of the charts. So some really clever people appear to be selling, perhaps. Okay, now let's take a look at some of the bigger stocks, bigger banks. So the JP Morgan, let's start with that. So we had done a video last week in which we went through some of the stocks. I'll try to keep this video short, so I'm not going to go in a lot of details of the patterns. I will refer you to watch that video, and I'll try to put it in the link as well in the description. So here this stock has actually broken below last Friday, below 38.2% Fibonacci retracement. Folks, that's not a good sign, because we were hoping that this 38.2% will hold as a support, but now it looks like the next destination could be around the 61.8% retracement on $118 per share. Here on the other hand, if we just kind of zoom out, what there could be a possibility for a retest of the COVID lows. Cannot rule that out. However, There is also a 78.6% retracement coming around $97. So guys, if the 61% retracement breaks, then I will do some additional pattern which I will bring in here, and we'll begin to take a look at to close further our analysis for further downside targets if it happens to be the case. Let's take a look at the Goldman Sachs. So here we go, guys. Is the Goldman Sachs. The pattern that we are watching here in this is there is a possibility for this stock to actually reach down all the way to $240 per share, where there is going to be a good amount of support coming in. Whether that's going to hold or not, we don't know. There's structure and then some other pattern formation. Now guys, the important thing to note is that last Friday, the stock actually closed lower, 78.6% retracement. That's $310. So just like JP Morgan, which closed below 38.2%, this stock actually closed lower, 78.6%. So it looks like maybe there's going to be a retest around $280 per share, and then finally maybe it will reach the pattern that we are watching. Okay, guys, let's take a look at the next stock, which is going to be the Bank of America. So the Bank of America stock actually looks pretty weak compared to the other two major banks which we had just taken a look at. That's JP Morgan and Goldman Sachs. So here looks like this stock is moving towards the 78.6% retracement. That's around $25 per share. The COVID lows perhaps couldn't also be not ruled out if this breaks. All right, guys, now let's take a look at what's the next one we should look at. That is Morgan Stanley. So the Morgan Stanley seems to be doing better, particularly compared to the Bank of America. And here, let's try to draw some support trend line. And we have a roughly a trend line coming here, support as a rough guide. But what is good to note is that the stock has actually last Thursday touched the 61.8% retracement. Whether that's going to hold or not remains to be seen. But there is a chance that if this doesn't hold, we could be moving in an ABCD formation down, pretty much like what we saw in the Goldman Sachs. So that's gonna take us down to around $64, or roughly, let's say $65 per share level. Some interesting fact to also make a note of is that level is also where we have an open gap, which is still open back from 21st of December. So maybe the price actually goes and also close that gap. So guys, this is what we are watching in the major US banks and also the banking index. Um, and if you like our analysis, how we watch the markets, the patterns, and we make use of Fibonacci retracements, please do subscribe to the channel. And if you like the video and the analysis of it, then please do like the video. It just tells me that people find the videos I put out, the content, good from an educational perspective, and it's just encourages me to keep on producing more educational content for you guys. So thank you very much. Good luck and good trading.